All right, guys, what is going on? What is Gucci? What is Gucci, gang? Let me know if the microphone is too loud today. I did move it closer. So, yeah, if it ends up being too loud, just let me know. There's a limiter on it, so it shouldn't be. But as you know, I am not perfect, so let me know. Let me know. Did you have a good weekend? Did you guys have a good weekend? I don't know if I want to record today's stream or not. I don't think I'm going to. Oh yeah, smash that like button. Oh yeah, hit that like button. Drop a like, drop a like. 30 viewers, 10 likes, baby. We got to get those numbers up. Keep getting lucky. So I'll show you how to do that. Because it's 100% not skill. So, yeah. Man, this stuff is just too fun, dude. This stuff is just too fun. What's good? Laurent, Scott, 2020, Mark, Julius, Roger, Nicholas, Jorks, Techno, Garrett. I think that's how you spell that. Thank you for these valuable insights. I'm really looking forward to the Academy and the value it will provide. Applied consistently over time, I believe the results can be exceptional. Truly, thanks. Yeah, they can be. And you're looking at part of it right now. Yeah, that's exceptional. Because a lot of mentors cannot do this. I do it every week. So I love that. You know, it's not as much of an ego thing as it used to be. Part of it is, I mean, that's always going to be a thing. When you're good at something, like you're going to take, you're going to take pride in it. You're going to take ownership in it. Whether that's trading, whether that's analysis, whether that's money management, whether it's sports, whether it's writing, reading, like whatever it is, man, like you're going to have some level of ego always. It's just a matter of making sure that that ego doesn't get in the way. Too much of anything is a bad thing. So, yeah. Julie's had a blessed weekend. Love that. Finally getting myself together again. Whatever that means. Good job. What's up, Alexandra, J, H? It's important to stay grounded and truly master something before passing it on. Yes. Yes, yes, yes. Okay, so we got almost 40 people on here now. I got a couple of announcements for you before we dive into things. No, not too much. Nothing crazy. Nothing too crazy. The first thing is I added another video to the helpful videos playlist. It's called How to Think Like the Top 1% by a guy named Justin Sung. It's about an hour. It's a little less than an hour long. I thought it was pretty good. And he talked about meta models. It's like mental models, but slightly different. So I looked, he has like 2 million subs, and I looked around his channel, and he's a guy that teaches people how to learn, basically, which I think is pretty solid. But that was the first video I watched from him, and he posted like a 5-hour video. I was like, dang, it's this whole course on learning. So I started that. I got maybe 45 minutes into it, and then I went to bed. So I'll probably pick up on that later. But that's a good video. You should watch How to Think Like the Top 1%. He goes over 4 meta models. Current book of the month. Okay, current book of the month is The Meditations of Marcus Aurelius. Okay. I think the viewership button is broken. All right, whatever. Anyway, book of the month for April is The Meditations of Marcus Aurelius. I will most likely put out a companion essay on Friday. So I started it today. I don't know if I'll finish it today. But yeah. And then, dude, I'm massively excited for next month. It's 48 Laws of Power. Wonderful, wonderful book. And I think you guys will like it. All right, so the first thing I have for you today, you know, we're already on gold. I guess we could start with that. Are you guys good with that? Y'all want to start with gold? That was kind of the point behind today's title, by the way, in case you were wondering. Another lesson supply and demand can't teach you. Does that sound interesting? You don't have to answer that. Of course it does. So this is not part of the series that I'm doing for Stoic Society, and actually I really forgot to change the trim. I'll just keep going. I'll do it tomorrow. Thank you, Mark. I appreciate that. So because it's not part of that series and I forgot to change the trim, I'm gonna assume that most of you already know what market maker models are. That is a big piece to this, as a big component to this. But dude, I cannot even put into words how clean all of this is. And that's what I want to go over, the cleanliness of this. This is a GC continuous contract. So this is gold futures, and this is a 1 minute chart. So it is small time frame. But I wanted to teach you a couple things today, and this being one of them. So it's not entirely new, but it might be new to some. And again, there are just schools of thought that I have been through that I, you know, never learned a lot of things. And it's not always to spark debate or controversy or, you know, to get in disagreements or whatever. But it's just the truth, man. Like, there are a lot of things that I know, that I teach you, that I did not learn from stuff like baby pips or Google Images. You know what I'm saying? So this is one of them. And although I don't always use this, it is good to know. And I think what a lot of us do, and this is just speaking from my point of view, because I can't, like, I can only imagine what your perspective is. I can't actually know your perspective and your journey and how you view things and how you think and how you trade. What I am assuming, I'm guessing, that when we learn concepts, I think what we like is close proximity. We like short term, and we really don't view concepts like, I guess, after a certain amount of time. Like let me explain this differently. I was looking at this the other day. This was on Friday, and this was from the London session for gold. I think that's purple. And so if you were to, I think, look at something like this, okay? Can everybody see that? Yeah, that's good enough. I was looking at this, right? Because of course I'm like looking at the futures, I'm looking at stocks, I'm just browsing around on Friday. And what occurred to me was that this could potentially be a buy model. And that's what I was looking to see if that's what it was going to be. And silver here was higher. So at that time, gold was lower. You see that? Is that pink? Yeah. I think that's the red one. So what I'm looking at afterward, meaning, you know, we ran lower, we went into a discount, and then we failed to get up there, and then we had the weekend, right? And Sunday's gap, and it's like way down here. So what I'm saying is we had a potential buy model, but in comparison with silver, that was not the case. So gold did not make a higher high. Gold did not catch up to Thursday's high, and we ended up, you know, going into the weekend with that retracement. But again, at the time, I always look at how we make the low, right? When and how, because those are important. We have a low from Thursday, Asia, I believe. And then Friday, again, Friday's London, right? How did we get to that low? We did it with an imbalance, and then we had a little bit further, you know, movement lower. Rallied off of this, and we end up getting a V-shaped reversal. Did I cover that on Friday? For the members here on our stream, did I talk about that? Or did I talk about the indices? Because oh shit. I mean, shoot. Sorry. Did I talk about the V-shaped reversal and the A-shaped reversal on Friday? And I know I covered some of that last week with the phases of price. I showed you this last week. Right, I had made this and I showed this to you guys. The phases of price, consolidation, expansion, retracement, reversal. And the two different reversals are V-shaped reversals and A-shaped reversals, at least like in this image. And I think I covered that a couple of times last week. And this is a V-shaped reversal. Not on gold last week, but I don't think on Friday. Okay, that's fine. The point is, I want to see how we make the low. And the last imbalance on the way there is usually going to be a very good low risk buy of a market maker buy model. Okay, like period, point blank. That is the inversion model. That's very close to the Judas model. Not quite the same, but very close. And, you know, that's what you want to see when the market makes a low, right? Manipulation. Sometimes you get a turtle soup, and then that last imbalance becomes an inversion to go higher, right? Now, coming back to what I was saying a minute ago, I think what a lot of us do is when price is no longer near or close to that concept, we almost just either get rid of it or we don't look at it anymore, kind of like out of sight, out of mind. It's like, okay, well, if price is, you know, up here, then why would I be worried about this? And we're looking at other stuff. It makes sense, right? Like, why would we need that down here if we're up here? And I'm in agreement. I wouldn't. I don't need that. It's good to know that it's there, but that has no relevance up here. So, and let me know if I'm wrong, or drop a 1 if you do this. You know, once, you know, whether your trade is over or like it's the next day or something, and you're no longer looking at it, you either, you know, do what I do and come over here and take the drawings off to refresh the chart, or you just, you know, keep going and it's no longer on your screen, you're looking at other stuff, you know, whatever. Do you guys do that? Yes or no? Drop a 1 in the chat if you've done that before. You're looking at concepts, like we can come up here too. You're looking at concepts, and like right here, for an example, just for example's sake, oh, the last imbalance, we trade through it, you know, can't do anything with it, we go lower. And so now that that's not really relevant anymore, You just start looking at other stuff. Oh, well, we got, you know, this and that and the third, and now I'm focused on levels of liquidity and all this other stuff, right? You just kind of brush it off. So I think it's not a terrible thing to do, but I think the mistake is we never look at it again. But these are still relevant later on. Do you want to know how I know that? Do you want to know how I know that? Well, it's the chart, obviously. But I want you to watch this. Instead of drawing out the box, I'm just going to draw the two lines here so we can get the price levels. And I'm going to make them purple. Okay. So I want you to like really pay attention here, because watch this. This was the last imbalance in that V-shaped reversal. And then we went higher and higher, and then, you know, we don't look at it anymore, right? 4761.4 is the low end of this. And then we have a gap on the high end, so we include that gap. So the high end of that is the close of that first candle. So we're at 4765.3. So does everybody understand that? Drop a 2 real quick before I show you. Drop a 2 in the chat if you understand how we got those numbers. We have no imbalances on the way lower. We have wickage here. Like we have wickage that overlap. We have wicks here that overlap. This was the lowest candle. We gapped away from it, sure, but now, you know, price has gone higher. So on the move lower, there's really no imbalances down here. This is one, but we include that gap. So that's exactly how the numbers appear. Okay? Now this is also what we're going to do. We're going to cut that in half. Okay, so the halfway point is roughly about right there. We can all agree with that, right? That's the halfway point. We'll do a dash line. So that's all that I did. No magic or crystal ball. All right, none of that stuff. It's purely technical, based on rules I've talked about for God knows how long. And all I did was cut this in half, because remember, every concept has an inversion. Every concept can also be reclaimed, I think. I don't use that, but I'm sure it's possible. And every concept can be cut in half. Now, the reason I started this conversation this way is because that was utilized. It looks like it was probably utilized here too. 770.3. What's the low on that? 765.3. Oh, but there's no perfection in trading, right? But the low is the same as that. Okay, that's fucking weird. But anyway, when price is no longer close to that, this is my honest opinion. We don't look at it anymore. We don't look at it. You want to know why that's a mistake? That's why. That's why. When you look at something like this, right? Can you see that? Drop a 3 if you can see that. Is that not badass? Look at today's price. Today is Monday the 13th. That was the last inversion. What was that, on Friday or Thursday? Friday. Okay. Friday's London V-shaped reversal, right? We had rallied off of it, failed to get those highs. We tapped into it again on Friday. Then we had our weekend gap, which was crazy. So I think there was some deal that we were supposed to do with Iran and the deal didn't go through. So, you know, markets saw volatility, bang, we're like way down here. And of course, nobody's going to look at that anymore, right? But look at this. Look at this. Okay. You want to know how I know it's not supply and demand? Because this was never taught to me in any of those schools. We fall short here. That's fine. We trade into it, stay in the bottom half in London, go lower, right? So now we have London's high here. Then we go into New York, roughly, leave behind the lows, right? And then what takes place? London's high is right there, and it's inside the one we just went over, the last inversion on Friday's V-shaped reversal in London. So we tap into it again at 8:30 at equities open. Interesting, right? Interesting. So then here, right, boom, what do? We take this high, short-term high here, and we take London's high, and we trade into that, right? But how do I know it's not supply and demand? Look at the bodies. Where are the bodies? Where are the bodies? Where are the bodies? Respecting the midpoint. That's why it's not supply and demand. That's why, because that is an algorithmic signature. You want to know what else is an algorithmic signature? What time is that? You want your jaw to hit the fucking floor? What time is that? What time is that, chat? You put it in the chat. I'm sick of teaching y'all shit. You tell me. You tell me. What time is that right there? What's at the bottom of your screen? When I highlight the candle that made its high, right? What time is that there on the bottom? You tell me. 8:49. What's the next one? Bam. 8:50. Weird. Weird. Strange. Random. Supply and demand. Right. Right. So what's after that? What's after that? Immediate rebalance. Is that blue? Yep. So I swear all the colors look the same with these glasses on, dude. They all look the same. It's just muscle memory with the chart colors. Okay, last imbalance on the way up. What's that right there? Bang. We trade through it, inversion as well. So we get an inversion and an immediate rebalance at the same time. Weird. That's weird. We have another imbalance right here. But guess what? That gap is there too, so we include that, right? Bang. Oh. Price can never get through that. That's weird. That's not supposed to be purple. That's supposed to be red. Because now, right, what have we done here? We left behind triple lows. That's better than 2. 3 is better than 2. You can ask my exes about that. We won't go any further. We have original consolidation. Leave it back into it. Right? Bullish until manipulation. Okay, London's high is right there. So what is this? Manipulation. At the right time. Time, price, and context. The law of high probability. That's my fucking law. Nobody taught you that. I did. Because I fucking made it. 8:50 to 9:10 is your 9 a.m. macro. Bang. Reversal macro. Okay? We're probably going to attack those lows. So anyway, we trade lower. That looks like the 50%. I can't tell, chat. Okay, kinda. Yep, we cross 50% back into a premium. That's why that is a premium imbalance. That's why that is a premium inversion. Although you don't have to wait for 50% to trade premium concepts. Okay. We trade lower, back into this imbalance a couple more times. No problem. We trade lower. Now we're in a deep discount. Are we buying that? No. No. Why would we buy that? We have the Judas model here. We have a high, a higher high, and then that third higher high with the last imbalance. That is the Judas model. That's my Judas model. Okay. So manipulation, not quite turtle soup, but close. It's just a 1, 2, 3 reversal. Not turtle soup, but similar. Bodies respecting the halfway of that old V-shaped reversal in London. Okay. Immediate rebalance in a premium right at the 25% level. See that? That's weird. Right? That's the lazy traders model right there. Lazy traders model is the 25% level. Stop at the high, aiming for a perfect 1 to 3. That's the lazy traders model. You're welcome. I would share with you the fair value model. I haven't really taught that as a model, but that is here. And I'll let you take a guess on what that is. If this is the lazy traders model, what do you think the fair value model is? I'll let you figure it out. But we leave it, we get back into a discount, or excuse me, we get back into a premium one more time, and a 50% level in a bearish market is fair value, right? Where are the bodies on that bitch? Are they in the upper half? Did we close above 50%? Nope. We did not. Where are the bodies? Not closing above 50%. We are tapping into this. God, this 1 minute looks pretty bad. This imbalance here, but we do have a gap on the lower end, so rules state that we must include that. Okay, look at that. Are the bodies in the upper half? Nope. Hell, the bodies can't even close inside of it. The bodies are staying outside of it. That's bearish. Bearish signature, right? Yep. We trade lower, but now what are we at? Let's borrow this for a second. Okay, where are we at now? 950 is right there. Okay, you see that? So that's 950 right here. So at 951, what am I telling you? Bearish macro for gold, steady only. Okay, what did we do inside of the time window? Huh? What the fuck did we do inside the time window? We rallied a little bit. Oh man, macros suck. Macros don't exist. Macros 20 minutes. You're 5 minutes into it. We still got another 15 minutes. Right down to the lows. Bang. Perfect. Perfect. It's inside that time window. See that? Gold low's done. The luck just never seems to run out, does it? Right. Because these very things that I just taught you, well, if you're new, I just taught you. If you've been here for a while, you probably know this already. But everything in here, dude, it's not supply and demand. Algorithmic. Algorithmic. You know, I really don't know if the 50% phenomenon is algorithmic or not, but I'm going to assume that it is. And price respecting up candles in a bear market. And price is reversing at the right time, and it's seeing expansion at the right time too. Ain't that weird? It's not random. So, yeah. That's pretty cool shit, isn't it? Right, George. All the sellers came in, yeah. They all came in at the same time. Makes sense. How far back would you keep the lines based off previous information? I find it gets messy if I save everything. Yeah, it does. It does. I do not mark up every single concept. I look at them, and I don't, you know, I miss things too, because obviously no one can eyeball every single concept on every time frame all the time. Like that's too much. That's way too much. And it doesn't, you don't need that. But the point I'm trying to tell you is, oh, this is another good point too. I didn't write this down, but I'm glad I remembered. I think, now, because you asked me that, that's a great question. I think, I don't know what goes through people's minds when I teach them this shit. But what went through my mind when I learned all this stuff, as I learned all this stuff, I used to think, okay, how can I use that? Is that tradable? You know what I'm saying? And that was the wrong frame of mind. That was the wrong way to think about it. I always come back to this analogy of puzzle pieces. Everything here individually is a piece, okay? Yeah, I really don't want to take everything off. But just imagine this for a second. This old inversion is one piece. This element of time is one piece. I know, Julius. That's why I teach you guys this stuff. And a lot of people can't. That's why I take pride in that. That's why I have a little bit of an ego too, because a lot of people think this stuff doesn't exist. Oh, macros are stupid. Inversions are stupid. Okay. But, you know, my community is getting all kind of payouts. So, you know, we have to rethink what's stupid. Or don't. But anyway, this is one piece. The time element is one piece. Immediate rebalance is one piece. Inversion, one piece. Not the TV show, but I'm saying it's an individual item. Okay? Like the grocery store is filled with thousands of items, but every item has one barcode. It's an individual thing that you can buy. The Judas model is one thing. The imbalance with the gap included is one thing. The phases of price is one thing. This is an A-shaped reversal. I don't even think I covered that. Expansion higher met with immediately expansion lower. Look at it. It's an A-shape. Hell, even the immediate rebalance drawing makes it an A. It's an A-shaped reversal. What did I teach you about the phases of price? I taught you there was two processes that had 3 steps in them. And this is one of them. Okay? Reversal. After a reversal is a retracement. After the retracement is expansion. Do I teach you stupid shit? The stupid shit keeps working, doesn't it? Make that make sense. The other one I gave you was expansion, retracement, expansion. Wow. That still continues to work, doesn't it? Weird. It's so random. How does he keep getting it right? How does he keep getting... He just keeps getting lucky. That's all. I'm the luckiest person on Twitter, obviously. Because none of it is skill. None of this is skill-based at all. Knowing the steps, knowing how to read price, knowing, hey, you know what? That 50% has done what it's supposed to do. Now we're approaching a macro. Okay, cool. So study it. And I sent it out. I sent it out a minute late. Hell, I got to go to the website, type it up, hit the send button. It takes a few seconds, okay? So I wasn't trying to like tweet right at 9:50, but I thought it was a good idea. Like, okay. Right. And then there's your time window. So we trade up. All these candles in here have no shirt on it for some reason. No shirt, no shirt, no shirt. So we come up to all that. Up candle here. And it's a 1 minute time frame, whatever. We get a retracement. And that retracement here is part of the second leg of distribution of a market maker sell model. That's why if you don't know sell models, you're not going to know what the steps are. If you don't know what the steps are, you're not going to know if you're going to anticipate a retracement or an expansion. Oh man, price is coming back up. What if it hits my stop loss? Why would it hit your stop loss? If we're in a bearish market, 50% is going to be a fair value. All right. Well, 50% is a fair value level. A fair value level in a market that is primed to go lower it's not going to come back up for those highs. It's not going to do that. You think it might do that. I don't. I have a pretty decent handle on this stuff. I'm not perfect. I take losses too. But again, if you don't know the phases, if you don't know the concepts, if you don't blend the shit together, you're not going to know. You're not going to know. And then you don't even know what stage you're trading. Are you trading the lower short? Are you trading the first leg? Or are you trading the second leg? Are you trading the high of the second leg? Or are you trading within the range of the second leg of distribution? Like, you don't know. There was a video I did a long time ago. I might have it on a Google Drive somewhere. There was a video I did, and it was something like, if I only had to trade gold and silver. Ooh, excuse me. And I would tell you, if I only had to trade gold and silver, this is exactly what I would do. Market maker models, phases of price, premium discount, and I would do relative strength analysis with silver. And whenever you get this type of stuff, you know, you're golden. That's what I meant to say. Okay, let me come back for a second. So you remember these pieces, right? You remember these pieces individually. The phases of price as I guess multiple pieces. Like the reversal is one piece, the retracement is one piece, the expansion is one piece, the retracement or everything is one piece individually. The consolidation, it's an individual piece. Putting those pieces together, that's how you get high probability stuff. Okay. But my main point I want to tell you is you do not, okay, you can write this down. I hope you write this shit down. You do not need to trade the highest high. You do not need the high after that. You do not ever need any one particular piece and that's it. Okay. You might trust shorting above old highs. A lot of people don't. You might like waiting for the crossing of 50%. You might watch this and you might think, okay, this might be the manipulation phase. All right, man, fuck it. I didn't mean to delete that. You might watch that and go, okay, this candle closes. Oh, that's an imbalance. Okay, let me watch it. Bang, gets traded through. Oh, shit, that ain't bullish. Next candle. Okay, well, we rallied up. Are we going to continue higher? Oh, maybe not. Bang, we drop off. Oh, okay, well, that inversion held. Oh, well, look, it came up all the way up here. We got an inversion and an immediate rebalance. Well, we're definitely not coming back up here. Market makes a new low. And a lot of people think, oh, man, it's already made a new low. Oh, I've missed a move. I missed a move. What the fuck are you talking about? You missed the move. Bro, it's barely crossing 50%. And if this high's been set and we're going to those lows, you are still early. What are you talking about? That next retracement, you may not have got the first retracement, but you can get the next one. If you didn't get that one, you can get a later one. That doesn't always happen. Bang, market comes all the way back down. Or, well, it extends all the way down to the 75% level. Oh, man, I've missed a move. Yeah, you might have missed a move. Then don't trade it and miss out. That's fine. But there are still opportunities because guess what? We come back up to 50%. That's its own opportunity. That's its own model. That quite literally is the fair value model. Fair value model. You can short that. What are you talking about? You missed the move. And the fucking move ain't over. You ever watch a movie halfway through and quit? You don't have to. You can keep watching it. What are you talking about? It's not over. Bang. Oh, well, now it's over. Now it's definitely over. No, it's not. There's still this macro. We still have the macro opening price. We can still short in that time window. What are you talking about? Man, fuck, dude. Sorry. These I have neuro mints, dude. Jordan put me onto them, and man, they're mints. They're strong as shit, and they have 100 milligrams of caffeine. And I had a monster, and then I had that right after. And man, I feel like I might not even leave out the door. I might just go through the fucking wall, honestly. I feel great. But do you see why? Again, we can all agree to disagree on certain things, but can you see why my view is that this is not supply and demand? Can you at least level with me there? Can you understand why my POV is that this is not supply and demand? There are no indicators on this chart, but yet you are seeing precision, almost precision, bodies up here, precision, bodies, time window, pool of liquidity. And there are no tools except for candlesticks and my brush tool, and that's it. That's it. That's all. If it was anything other than algorithmic, then it would not be this precise. If it was not controlled to a high degree, I would not be able to tweet again and again and again, hardly ever being wrong. The most recent time I was wrong was on the indices. I said we might not make a low soon, and we made a low the next day, and then there was some sort of deal and the markets ripped ass over the weekend higher. So I was wrong in that regard, because I thought we were going to continue lower, and that's a good segue over into the triple Qs, because I did want to go over a couple more things with you today, and I've been talking a lot of shit, and I did not keep a good track on time. This is what I'm referring to right here. Yeah, that was not a well-timed tweet. There will be incredible moves once the market is ready to rally, not soon. And then we made a low the next day. So yeah, look, I'm not afraid to show that. Yeah, I got that wrong. I thought we might go for those lows. I really thought that. 100%. 100%. But you know what? Between Friday and Monday, all type of shit can happen. Trump's been doing all type of shit with Iran, with insider trading, with all this stuff. Hasn't been the easiest market, you know, to get a handle on. So yeah, in that sense, on the daily time frame, yeah, I was wrong about that. We made a low on Monday, and we've been higher since then. So yeah, that might not be great, but I told you specifically, look how we left behind highs on Microsoft and the triple Qs. We have some highs right here, some internal range highs, and then we have all-time highs. This is the highest one, right? Look what we're trading towards. So not to dog on you or anything, but people who are trying to short this market right now, why are you trying to short? We literally have a high time frame pool of liquidity right up here. What are you shorting for? And I say that to be, I'm saying that nicely. Like, that's a mistake. Why are you shorting? The market doesn't have a reason to go lower. So I'm just trying to help you. I'm not trying to say you're an idiot. Okay. Obviously that tweet, you know, makes me look like an idiot. That's fine. And that's my point. I do not always get it right. Nope. But when probabilities are stacked, that's when you go in, baby. Go watch that market review on Thursday. After the close of business, I said Friday should see expansion. Again, another dumbass move. I forgot that Friday was Good Friday. I didn't think about that when I was making the market review. So Friday's candle shouldn't be there. The same bias continues into the following trading day, which would then be Monday. Monday, expansion. Tuesday, takes out Monday's low, expansion. Wednesday, expansion. Thursday, expansion. Friday, not really expansion, but it is an up close. Over the weekend, we had a fat gap because of, oh, there's no deal being made or whatever. Those lows we left behind, yoinked, bang, right at the open. And then we're still heading for those highs. So everything here, daily, is pointing to higher pricing. Small time frame pointing to higher pricing. This, why would you short this? There's no reason to short this market at all. Now, this today doesn't look very clean to me. We do have a lot of wickage. You know, I don't really care for that. But, and we just left behind equal highs too. Nice. Yeah. So there's that. So I'll tell you about gold and some concepts that you don't find a lot of, like inversions and even old inversions. So go study your chart. Don't just take my word for it. And I covered a little bit of triple Qs, and I want to cover two more things, and then we'll say sayonara. I'm gonna say the best for last. So we'll go over eBay first. eBay, I pointed out this gap last week. I think it was on Friday. I think I mentioned that on Friday's live stream too, because Friday's live stream was a member only stream, and I think I covered that, and I said we're back into this gap. I want to see if we can, see expansion for those highs, and we're up 1.5% on the day. Nothing crazy, but it's looking fairly bullish. It's looking pretty decent, which I don't know if eBay is part of the Nasdaq or not. What says Nasdaq up there? All right. Well, that's in alignment with the triple Qs. That's in alignment with the index. So looks good. Easy. Not complicated. I'm going to catch up on the chat in a minute. Let me just get through this and then we'll be done. Intel. Hot damn Intel, dude. When we were back in the 20s and even like the 35s, I looked up here at like 7 or 69, way up there as low resistance highs. And I honestly thought, I was like, bro, we're in the 20s to get up to the 70s. I was like, man, if we do that, that's probably going to take years. I mean, because look, we set that up in 2020 and 2021. We ripped all through 2022. We had a somewhat of a bullish 2023, rip ass 2024. And then most of that 2025 was not a lot. And this thing has been utterly bonkers, dude. Ah, man, I really wish I would have bought more at 21. Like 21, something like that was the lowest I ever picked it up at. We're at 65. This has been on fire. I think that was a weekly mitigation here. That's probably a weekly or a monthly mitigation here. Back in January, we finally got above the original consolidation of January of 2024. Right? So short-term buy model. Cooled off a little bit. And then look at the last couple days, dude. Absolute insanity. Absolute insanity. Over 50% in the last 2 weeks. Man. Like, position trading is great until, like, you look at it inside consolidation. Because it'll, like, not do shit for 90 days, 4 months. And you're like, okay, bro. Should I put my money somewhere else? Should I do this? Should I do that? And, a lot of people might mistime that. Imagine anybody who sold stock in the 40s. And she literally, in the last 2 weeks, blasted to 65. But the lowest I ever got was 21. 21. And we're at 65. So this thing is on an absolute mega monster rip, dude. Absolutely phenomenal. Original consolidation. Left it. Back into it. Bearish till manipulation. Lows, manipulation. Short-term manipulation. I don't know where 50% is, but this looks like first leg back into a discount, and we're currently part of the second leg. Oh yeah, we're in Z mode now, Julius. We're in Z mode. 100% in Z mode. Those highs down to the low that's been set, right? Look at that. Cross 50%. That's the indication that we're going up there. We get back into 50%, or back below 50% rather. Let's go to daily for a second. Okay, dip into it a couple lows, one more low at the tail end of March. That was all discount in here. And this is the second leg of accumulation. Whether it's a 1 minute gold or a weekly chart of Intel, what's the difference? What's the difference? Technically, there's no difference, bro. Even though they're not the same, you know, gold is a commodity and we're looking at gold futures. It's a futures market. Intel is a shitty chip production company that the government had to buy 10% of because they're getting their ass kicked by Nvidia. And this is a weekly chart. And this took 5 years to form and only like 8 months to really pan out on the upside of a stock, of a publicly traded company. But yet they are both following what? Market maker models. Insanity. They're still following the same rules and the same... Well, I mean, I don't really want to say patterns. I think that's the wrong verbiage, but it's still following the same stuff. So how could you believe it's anything other than controlled and anything other than an algorithm? So that's, again, this is just my opinion. So, and that's pretty much all that I had for you today. We talked about a lot of stuff: Intel, eBay, gold, shorts, Meditations of Marcus Aurelius as book of the month, and that I added the How to Think Like the Top 1% by Justin Sung to the helpful videos playlist, which is public. So yeah, I feel like you guys got some value today. Maybe you did, maybe you didn't. But let me go through all the questions real quick and then we'll shut it down. So Techno, I don't know if you're still here, but they asked earlier about, can you get clear anti-blue light lenses for your glasses that won't change any colors of what you're seeing? So that is what I've been wearing for a long time. Most of y'all have seen me. I am not organized here. I don't know if I have them. Oh, here they are. Most of you have seen me wear these. These are the clear ones. And you've seen me wear these, the Gunners, which are yellow, I'm assuming, right? And you have these, which are orange, and you can't see them. I left them on my bed frame, but there's red ones. So there are different levels of how much blue light they block. So the clear ones, they block some, but not everything. The orange ones, I think, block like 90% or something, or 95% or whatever. It's a lot more. And then the red ones are like the highest amount of value that you can get for anti-blue light. So it's just about what levels do you want. So like, think of it like this: the yellow ones or the clear ones might be good for most of the day. And then maybe like at 3 to 4 p.m., you could put on the orange ones. Up until maybe like 2 hours before bed, you could do the red ones. And I'm telling you, the ability to fall asleep is a lot easier. A lot of us may not understand that, because, and maybe you do this, but, you know, do you scroll on your phone? Of course you do. Even when you're in bed, you're trying to fall asleep, but you're scrolling through TikTok or Instagram or YouTube Shorts or whatever, and people wonder why they can't fall asleep, because your eyes are getting cooked. Literally, that blue light is messing with you. That's why you can't fall asleep fast, or you get headaches throughout the day because of all the blue light. So that's why these glasses, they're designed the way they are, and it definitely helps. I wouldn't tell you otherwise. I wouldn't tell you to go buy a $50 or a $30 pair of glasses if they didn't actually help. Roger, quickly, Judas, the Judas model. I don't know if you're still here, but other people are. The Judas model is when you have a 1, 2, 3 like formation like that, and on that third one, it's the last imbalance in that run higher. That is the Judas model. Now that the way that I taught it to you is just really to take a 1 to 2. It means short the inversion, stop at the high, and only aim for a 1 to 2. And the whole thing was 1 to 2, 1 to 2. It's good for me. It's good for you. And so then that would be your exit, and you wouldn't hold for the lows. Simple 1 to 2. So, or if that wick only made it up here, then your stop would go there, and then whatever that 1 to 2 is would be that, and that's it. So that's the Judas model. That is the 1, 2, 3 formation. Turtle soup is a, well, we don't really have that. This is not the greatest example, but a turtle soup is a low and then a lower low below an old low. You see that? That low? We get below it, make a short-term low, and then take that low. That is turtle soup. And it would be inverted if it was lower, or like if we had a high. If we have an old high and then we take it and then we get another one, that is a turtle soup short. So that is the distinction. Mark, I said I didn't mean for Friday, but one day I think I'm going to make a video. It might be a live stream, but on the different trading models. There's like 7 or 8 easy trading models. Judas is one of them. I already gave that to you. The lazy traders model, I gave that to you. That's the only model that has a 1 to 3 RR. That has a 1 to 3 RR minimum, I should say. Most of the other models have 1 to 2s. The lazy trader is the only one that has a 1 to 3. Now, if you include like the low risk short or low risk buy, you have a way higher RR with that one. The fair value model, I taught that to you today. I taught you the end trade, didn't really teach you the stop loss, but there's one. And then of course you already know the mitigation model. There's a propulsion model. There is a suspension model, if you'd like. So there's all kind of models you can do. But at the end of the day, models best perform when you have the proper framework. If you don't have the proper framework, if you don't know where the market's going based on a pool of liquidity, right? Based on a consolidation. If you don't have that, the models are not going to work well because you don't understand where the market is going. Okay? So, how many is that? Like 5? Judas, lazy, fair value, mitigation, propulsion. That's at least 5 off the top of my head. They won't be called that. Well, some of them will be, but others won't. They'll have a different name. Second leg model, that could be a thing too. And yeah, G, I meant to probably get to that earlier, but they said I spent far too long focusing on people who emphasize fundamentals and data, and now I realize I've been holding back my true potential. Of course. Of course. And it's not, again, it's not to be rude or disrespectful. You know, if people believe in that stuff, if you believe in fundamentals and you believe in data and all that stuff and it works and you're profitable, then who cares? But those folks are not going to have this level of precision. They're not going to be able to wick in and wick out. They're not going to be able to do that. And it's not about that. It's about for me, it's about taking high probability trades, stacking probabilities. Okay? You don't need to trade every model. You don't need to know every model. 1 or 2 models, maybe 3 models, and you're good to go. You don't have to trade at the high. You don't need to know about every inversion. But if you know, okay, we have this, this, and this. We have this, this, and this. Okay, cool. Well, now we have 7 stages, and we're at the 4th or the 5th one. So now I need to get in sync with lower pricing. That's why I can tweet, and the market obeys me. It's not that the market is obeying me. It's not. But it makes it look like that because I am only tweeting what I believe to be massively high probability. Go through my Twitter and you'll see the shit is insane. And I'm telling you, if you are doubting this stuff, I am telling you, you can do this too. You can do this. I promise you can do this. You just have to study it. You have to study, you have to backtest, you have to look at the things that I'm telling you to look at. Otherwise, you're not going to see it. If I'm telling you how to get precision and you're not looking at it, you're not going to get fucking precision, period. You'll get lucky once in a while. Who cares about that? You want consistency. That's what you want. But you're not going to get that if you don't study. All right. Anyway, that's it for the chat. So with that, y'all be good. Be blessed. Hopefully you guys learned something today. Drop a like on the stream if you have not done so already. But we'll be here tomorrow on Tuesday the 14th for another live stream. That one will cost you. That'll be $100 tomorrow. Right? $100 stream tomorrow. So, obviously I'm kidding. These are all free. These are all free, baby. All free. So, make good decisions. And I'll see you tomorrow.